the end game is to securitize the entire asset class, securitize the asset class, and so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from a trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between probably 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5. So you have fixed income, which is 5. You have equity, which is 15, and the traditional market. You have this raw energy source, which is 60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1400. So you've got this raw thing, and then you've got this traditional market. And what we've said to our investors, and I think they're starting to understand now, is so we're going to strip the volatility, strip the performance, strip the risk off of the bottom of the capital structure, give you like a 6 to 12% investment grade instrument to invest in, a 12 to 24% high yield instrument to invest in, a convertible investment that gives you 75% of the upside to 100% of the upside, but 10% of the downside. And then when we strip those performances and those vols via those fixed income instruments, you're talking like, say you raise 100 billion in capital. Well, you're grabbing 60 to 65% of the economic boost for the equity, for the MSTR equity. So when I sell 100 billion of fixed income, I'm going to tax $60 billion of boost onto 40 billion of equity on the MSTR side. That's how we get to 2x Bitcoin or 2.5 or 3. And of course, the real magic of the story is the baseline is Bitcoin is raw commodity. You either buy that on Coinbase, or Bitcoin is racked. You buy IBIT from BlackRock. That's the baseline. But it turns out most of the world doesn't want that. I mean, a lot of the world wants high voltage. They want 10x leverage. Susquehanna wants 10x leverage. Millennium, Soros, they want to be up there in the stratosphere. And then some people want, the MSTX, MSTU, those two ETFs raised $4 billion in a matter of weeks, no marketing. They want 4x, 3x Bitcoin. MicroStrategy is 1.5 to 2x Bitcoin. So some people want to be up there above the baseline. Look, if you believe in Bitcoin and someone can give you 2x Bitcoin and they can do it with intelligent leverage or with a balance sheet you trust, why wouldn't you want 2 times whatever you wanted, right? And then there's another world of crypto curious people. They're just tired and bored. How do you feel about a portfolio of 187 diversified preferred stocks that give you 520 basis points? And it's like, okay, you own the 16th tranche of the 18,000th regional bank, and it's like QSIP 199742. There's no volatility. You can't pledge it as collateral. You can't borrow against it. So there's a world, $300 trillion of bored money that's waiting to die, getting 2-3%. And then there's another 200 trillion of hot money. MicroStrategy is just going to sell all of those instruments up and down the chain while we ignore the baseline. And I'll just make this one point. Like when you're arbitraging this, you're asking the question, well, how fast is it appreciating? So Bitcoin is plus 60 And let's just say because it's plus 30 to 60 versus the US dollar. And my long-term forecast is 29% for 21 years. So we're plus 30 to 60. Then the next question is how volatile is it versus the dollar? Bitcoin's 60 volatile, but you can imagine it's going to be plus 30 to 60 more volatile. Then you ask the question, how fast is the investment cycle? If I borrow a billion or raise a billion of equity and I invest it in a real estate project, it takes 5 years, 1,500 days. If I invest it in Bitcoin, it takes 1 day. I'm running the investment cycle 1,000 times faster. And then the last question is, how accretive is the capital raise? So if I'm selling it at 3 times net asset value, you're capturing a 66% spread. The convertible bonds are capturing an 80% spread. When you sell a convert at an 80% spread and you do a billion of it, it literally means that you captured 80%, $800 million of capital gain on the day you did it. And you capture all of the capital gain for your shareholders forever on the 800 million. And so when you're raising 800 million and then you're investing it at 60% ARR or 30%, right? The amount of accretion is screaming. So what are we going to do? Well, we're going to do this $42 billion and then rinse and repeat and double it and double it and double it and double it. And you're going to say like, well, where does it end? Well, I guess when we've taken 1% of the fixed income market, which is $3 trillion, and when we levered it up and we've got 10 billion, we bought 3 trillion of Bitcoin and we're trading at $10 trillion in market cap, we'll be growing 20% a year.
All right. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Oh, look, I mean, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR. Gold is 7%. Real estate is 10%. Bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold. But I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company, but the real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility of the S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So yeah, I think I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class, right? My forecast is 13 million a coin by 2045 base case, upside and downside. I just expect another way to say it is it's 60% ARR at 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15 over 20 years. It'll just step down as it approaches that target. Okay. The smart thing to do is think about money as bifurcated into currency and capital. And the US dollar is destined to be the world's reserve currency. And the smart thing to do is just normalize stable coins or digital currency and let banks and corporations issue US dollar stablecoin like Tether. And then that market will go from 150 billion to 10 trillion. And the US dollar will become the medium of exchange in North Korea, South Korea, Cuba, China, Russia, Africa, South America, and probably most of Europe. Literally, if you want the dollar to become the world reserve currency and move between 8 billion people the speed of light on Android phones, it's easy to do. Just normalize a digital currency with a digital assets framework. You will have $10 trillion of demand for treasury bills to back it. And then I would say, acknowledge that the world capital network right now is real estate and equity. And if you talk to any billionaire, no one is bragging about holding all of their wealth in cash or bonds. It's real estate, it's equity. And Bitcoin is the emerging world reserve capital network. The most intelligent thing you can do is just sell the gold, buy Bitcoin. It's a free trade. Gold was a good idea in the 19th century. No one thinks gold is going to be the capital network of the 21st century. So just trade the gold for Bitcoin. You'll have 25% of the Bitcoin network. You'll make $100 trillion on the trade. If you don't want to trade the gold, just issue currency. It's a little bit of money. It's free. Print money. Buy 25% of the Bitcoin network. When the Chinese billionaires, the Russian billionaires, the Europeans, when they all basically start buying Bitcoin, the big winner will be the United States. It's not more complicated than you can have Louisiana, California, and Alaska for free by writing a little paper check, or sell the past, sell the stupid gold. Gold is going to, by the way, gold is going the way of silver, which went the way of glass beads, which will go the way of copper tokens, which goes the way of the giant stone coin of the Yap people. It's going to be demonetized because you can't zap $1 billion of gold from an Android phone to an iPhone in one split second. It's not complicated. Everybody's going to figure it out. So I'm willing to accept the existential risk of the expropriation of my property if the United States goes full on communist. But you can expect that I will agitate in favor of capitalism between now and then. And I'm an optimist. So I don't dismiss the presence of evil in the world. You see North Korea, you see Cuba, you see Venezuela. There is evil. It did happen. I just happen to believe that at the end of the day, Bitcoin is a force of good, and it's going to bring people back from the brink, and it's going to remind them that maybe they should embrace technology and freedom and capitalism and property rights and all of those things that made America great.
If we reach artificial general intelligence, the AGI, which I think a lot of folks who are in the Bitcoin think we might do sooner than later, don't the machines take the Bitcoin right out of the gate?
They won't take it. They will adopt it, right? You're going to have billions of AIs, and they can't get bank accounts, right? And by the way, the AIs are smarter than us. And so if you were an AI, you wouldn't invest in gold or silver or glass beads or copper tokens, and you wouldn't buy securities, and you wouldn't buy real estate, right? Not because it's hard to buy it, but by the way, it is hard to buy it. They'll be blocked from the 20th century economy. No one's going to sell the AI the house, and they can't trade bonds, right? So they'll be blocked from the 20th century economy. But the truth is, they'll look at it and they'll go, well, don't we want to actually grab billions of dollars of stuff that's going to, I'm going to grab 5 or 10% of all the money in the world forever that moves at the speed of light, that's in cyberspace, that no one could steal from me. Why wouldn't you? I mean, I think they're smarter than us and they're faster than us. So yeah, Bitcoin, it's the reserve capital of cyberspace. If you're going to store your capital asset, and as the AIs accumulate it, they're just going to drive the price through the roof. And so if you're a person, the smart thing to do is front run the AIs. They're not going to steal it from you. They can't steal it. They're just going to trade you pesos and rubles and real estate or whatever else services you want for your Bitcoin, and they're going to keep it because why wouldn't you? It's the smart thing to do.